Paul Tudor Jones.
Paul Tudor Jones. Paul Tudor Jones.
Paul Tudor Jones.
Paul Tudor Jones is one of the most successful traders of all time. It's reported that he has had 28 straight years of profitability, and he is legendary for predicting Black Monday, the 1987 stock market crash where the market fell 22% in one day. When the rest of the world was in complete turmoil, Paul Tudor Jones was able to extract a 60% monthly return that month and nearly a 200% profitable year. And today we are going to extract the key psychological lessons from arguably one of the greatest traders of all time. And at the end of today's video, I'm going to run through each of the stories and each of the lessons. And I'm going to show you as a retail trader how you can use the principles from Paul Tudor Jones to help you remove the negative emotions from your trading, to help you make more profitable decisions, to help you scale with funding, and to ultimately help you achieve consistent profitability. So you can go off and do the things you want to do. You can become a full-time trader, you can go travel, you can live life on your own terms.
I played backgammon with in college all the time during my second semester senior year in college. And he said, and I've always liked backgammon, chess, those type of games. And he said, if you think those are fun, if you really enjoy that type of stimulation, then he said, I'll show you a game that is the most exciting, the most challenging of all.
In 1976, after 6 months of work, Paul Tudor Jones went to his boss and said, I have to trade, I've got to trade. And he said, son, I'm not gonna let you trade right now. Maybe in another 6 months, I'll let you. Paul Tudor Jones said, no, you don't understand, I have to trade right now. And his boss goes, listen, the market's still gonna be here in 30 years. The question is, are you?
Paul learned to handle the bad days 11 years ago in New Orleans. He got a job working for a commodities trader who taught Paul much of what he knows.
It was a hell of a training ground. The first year I did nothing but get his coffee. I mean, I was learning by osmosis and stuff like that, but I was, I was a glorified secretary, which was fine because I was soaking in everything he did, every move that he made, every step that he took. And I'll never forget Friday afternoon, 3 wives of 3 of his clients from Mississippi came into his office because he had the most beautiful office I've ever seen, period. And everyone wanted to come in and see his office, his art collection stuff. And he sat there right in the middle of getting absolutely decimated across the board in these commodities, and with the most beautiful smile on his face, the most incredibly elegant, poised, and stylish composure, and just had a wonderful little chat with him for about 45 minutes to an hour. And I just was overwhelmed that anybody could be that strong.
Paul Tudor Jones saw Bunker Hunt turn $400 million into $10 billion, and then 5 weeks later, turn that $10 billion back into $400 million. Paul Tudor Jones says that he learned how quickly it can all go away and how precious it is when you have it. He goes on to say that for him, defense is the most important thing. It's 10 times more important than offense. The wealth you make can go so quickly. You need to be focused on covering your downside, covering your risk. Paul Tudor Jones has a rule that he only places trades that are 5-to-1 risk to reward, meaning that he's risking $1 to make 5.
I was hired to come in. I uncovered for Paul Tudor what he was doing at his best. One of those things that I learned from him, he risks for asymmetrical returns. In other words, most investors think you take huge risks if you're going to be a billionaire, huge risks to be really successful financially. The truth of the matter is these great investors do not take those huge risks. The vast majority do not. Asymmetrical risk reward means they try to do the least amount of risk possible with the most upside. He would look for investments where he didn't want to invest unless he believed if he invested $1, he could ultimately make 5 off that dollar, 5-to-1. Now, he knows he's going to be wrong lots of times. And so he knows if I risk $1 and I lose, I can risk another $1, I'm still going to be up 3, you follow? He could be wrong 4 times out of 5 and break even still.
He can be wrong 80% of the time and still not lose money. Paul Tudor Jones, forged by his early experiences as a trader and the things he saw, put a huge emphasis on covering his downside and covering his risk. He's always focused on the money he has risked in the market and how he can mitigate the risks around that. On top of that, he uses asymmetric risk to reward to ensure that every time he places a trade, the odds are in his favor.
Where you want to be is always in control, never wishing, always trading, and always, first and foremost, protecting your ass. And that's why most people lose money as individual investors or as traders, because of the fact they're not focusing on losing money. They need to focus on the money that they have at risk. How much capital is at risk in any single investment they have? If everyone spent 90% of their time on that, rather than 90% of their time on pie in the sky ideas about how much money they're going to make, then they'd be incredibly successful investors.
We've shown Paul Tudor Jones taking a massive loss for the day. And what I love is his mindset and his perspective on the loss.
Total devastation. You know, the agony and the ecstasy. This is what's known as the agony.
4:10 p.m. The stock market is closed.
We were on the wrong side of the market. What can you say? It's total devastation. We had a game plan, and yeah, we lost the battle. We haven't lost the war by any stretch of the imagination. Look, we just fumbled. We're down 17-0. It's only the first half, and we can score 3 touchdowns in the third quarter and take the game easily. Yeah, we're still up for the month. It's just painful to give. When you got a good profit, it's really painful to give some stuff back.
On top of that, Paul Tudor Jones gives us some key insights, a glimpse inside his mindset. These principles, what he's saying here is everything I preach on this YouTube channel. It's everything that my Bulletproof Your Mindset tool helps you accomplish as a trader. It's all about being present with the market, trading what you see, not what you think.
Where you want to be is always in control, never wishing, always trading, and always, first and foremost, protecting your ass. And that's why most people lose money as individual investors or as traders, because of the fact they're not focusing on losing money. They need to focus on the money that they have at risk. How much capital is at risk in any single investment they have? If everyone spent 90% of their time on that, rather than 90% of their time on pie in the sky ideas about how much money they're going to make, then they'd be incredibly successful investors.
We also get a key insight on Paul Tudor Jones's mindset from Paul's performance coach, Tony Robbins.
But why do most people fail in business? Because they don't execute it, and the reason they don't execute it is state. If fear takes you over, all your decisions change. True or false? If greed takes you over, does that happen also, yes or no? Yeah, you start thinking it's going to be great forever, I can do no wrong, and you start doing everything, taking huge risks you haven't really thought through. You got challenges there too. So my job with him is to really keep his psychology straight, as well as make sure his strategies and tactics are adjusting to the environment in an ideal way.
It's also reported that Paul Tudor Jones had a big focus on his processes and trading plan. There are even some pictures online of supposedly one of his old trading plans where he has a huge focus on his processes and his mindset before, during, and after trading. There's another great clip in this documentary where Paul Tudor Jones is now in a winning position, and he shows the importance of sticking to your plan and sticking to your processes and not deviating from that, not letting the emotions and the feelings take you away from what you know is proven.
February 17th, 1987. The stock market closes in 14 minutes. Based on the 1920 stock chart, Paul has bet against the herd that the Dow will take off today, and so far it has. Right now, Paul could cash in and make several $1 million. But if he holds on for a few minutes more, he could do better. He could also do worse.
I want to sell it so bad I can't stand it. I've just been sitting here wanting to sell it all day, but I know the thing for me to do is just not to, another thing for me to do is just to sit back. In fact, I shouldn't even be talking to you or looking at the screen. I should go work out right now.
He's very clearly a process-based trader who knows that the trading game's all about managing your psychology and keeping yourself in check so that you can consistently execute on your plan and your processes and stick to that. This is the difference between process-based thinking and outcome-based thinking, like I talk about in this channel. This is obviously what differentiates a master titan like Paul Tudor Jones from a lot of the retail traders out there. Another one of the subtle insights that Paul Tudor Jones shared in this documentary is around having a work-life balance and the importance of having things outside of your trading and structuring a holistic life because of sometimes the pressures and the stresses that traders can endure.
To do the job right requires, again, such an enormous amount of concentration that you've got to be able, it's physically and emotionally mandatory that, you know, that you find some time to relax, and you've got to be able to turn it off like that.
Paul Tudor Jones also shares some insights on his philanthropic foundation, the Robin Hood Foundation. And it's clear and obvious that he is driven by a deeper reason why. He's driven by a deeper vision than just making money for himself and even just for his family.
This year I just decided that 10% of all the money that we made as a firm was going to go to various charitable endeavors. Primarily, I have a dream.
Now, if you're a retail trader who's wanting to remove the negative emotions from your trading, scale up with funding, achieve consistent profitability, what I'm going to do is I'm going to dissect the insights and lessons we've gotten from Paul Tudor Jones, and I'm going to show you how you can directly apply these to make yourself a better, more profitable, more bulletproof trader. So let's dive into that right now. Longevity was a big part of Paul Tudor Jones's trading career. It's probably why he's been in the game for so long and has accomplished so much success. He shares this early story with his cotton trader boss, where his boss says, now listen, the market's going to be here for 30 years. The question is, are you? And I think this had a huge impact on his psychology. It's an insight that he recounted in an interview with Tony Robbins. So it must have stuck with him throughout his trading career. And it's obvious the way he has structured his risk management, his trading plan, the way he views the market. Everything he does is with longevity in mind. I want to cover my downside, I want to cover my risk, so I can stay in the game long enough. Okay? So the question here is, are you focused on longevity? Are you going to stick around for the next 30 years? And I think this is such an important question just to ask yourself and reflect on, because what I've seen with a lot of the traders, a lot of the retail traders out there, they don't focus on longevity. They're inundated by this picture on social media, and they have this image of what they want to do and what type of wealth they want to achieve for themselves, or what type of riches they want to get. And everything they do is on making money quickly and making money now. There's no focus on longevity. And what I've personally seen with a lot of traders, a lot of investors who make money quickly, they tend to lose it, because they're not forging themselves and they're not building the proper mindset or the proper foundations of being a trader who makes that type of money consistently. So what's obvious through Paul Tudor Jones is he builds his trading and he builds his processes in a way that's sustainable. Are you trading a style that can be sustained? Are you utilizing risk management that can be sustained? A lot of traders are risking too much. A lot of traders are trading too lower time frames, and they just can't sustain the watching of the 1 minute chart for the next 20 to 30 years. So they're trading a system that isn't congruent with longevity in the markets. They're burning themselves out. They're spending too much time at the charts. Their management is too time intensive. Okay? So I'm just bringing these to surface because if you're in this type of position, it's a good thing to consider. If you want to be in the game for a long period of time, but you're currently trading a style that isn't congruent with that, things need to shift either now or soon to ensure that you can be in the game for a long period of time. The other question here is your life structured in a way that can be sustained? Do you have time for your health and fitness? Do you have time for your family? Do you have time for work and for other businesses and other things you want to pursue? Because if not, then you're going to burn yourself out because you're putting so much focus into one thing, and over a long period of time, there will be consequences because you're disempowered in the other areas of life. Now, there's a caveat with this. Sometimes it's wise to go all in with your trading, and for 6 months to a year, do nothing but trading and be focused and be hyper-focused. But that's strategic, and you're doing that with the intention that after a year, you're going to diversify. You're going to trade a style that's more longevity focused. You're going to live a lifestyle that's more longevity focused. And it's wise to do that for a year and be extremely focused and trade lower time frames and try and make as much money as you can. But recognize there's a point where you're going to have to transition from a lower time frame day trader into someone that has longevity in mind. The next key lesson from Paul Tudor Jones was always cover your downside. That should be your number one focus. And he recounted this story of one of his bosses who turned 400 million into 10 billion, making him one of the wealthiest individuals on planet Earth at the time, and then turning that back into 400 million in 5 weeks. He said he learned how quickly it can all go away. So he goes on to say the importance of defense over offense. He says that risk management and defense is 10 times more important than offense in his opinion. So the question here is, how are you capping your downside? Do you have proper risk management in place? Are you adhering to that? Are you risking, for example, consistently 1% or less than 1%? Some traders do 0.5%. Some traders do 0.25%. Are you sticking to that? Some traders who trade swing style and trade longer time frames and have longer term positions may trade 2% or risk 2%. But anything more than that is a little bit excessive. The other thing is, do you have a drawdown protocol? When you start to go into drawdown and you start to go, below a 5% drawdown, do you have a protocol to manage and mitigate risk in those situations? I know in my trading mindset program, that is something I teach my students to manage their risk as they go in deeper into drawdown, mainly just to protect their psychology. Because what I find is that there's a tipping point for traders when they go deep enough into a drawdown, they start having psychological issues that take them severely away from their trading plan. So knowing you have that protocol and that process pre-built into your trading, and you've got that there to protect your psychology, is a huge bonus. The other thing here is, are you diversified? Do you have cash in the bank? Do you potentially have other sources of income through a part-time, full-time job, or even another business on the side? Do you take a little part of your profits from your trading profits and do you put those into long-term investments so that you're diversified? And importantly, if you are trading prop firms, which we're going to talk more about in a second, have you diversified your prop firms? Do you have multiple different prop firms you're trading for? Because we've seen recently with the My Forex Funds fiasco that sometimes you can be vulnerable to a prop firm going down. So how are you covering your downside? Do you have additional sources of income if you get sick and you can't trade for a little bit? Do you have cash in the bank if all income goes to zero? Do you have multiple prop firms? Do you have other investments that are yielding you an income? These are all questions that are wise to ask. These are all questions that I've extracted from Paul Tudor Jones, probably one of the best investors of all time, who stresses the importance of covering your downside. The other lesson we learned from Paul Tudor Jones is all about asymmetric risk to reward. 5-to-1 means I'm risking $1 to make 5. I can be wrong 80% of the time and I'm still not going to lose. This is an indication that even someone at the top of their game recognizes that they're still going to lose. And we saw in that documentary that he did lose, even though he thought he was going to win. So it's important to recognize that more times than not, you're probably going to lose as a trader. Hence the importance of proper risk to reward and risk management. So Paul Tudor Jones knew he was going to be wrong over and over. And he only took opportunities that had a 5-to-1 risk to reward because of this. He could be wrong 4 times out of 5 and still not lose money. So my question to you is, how are you implementing with your risk management asymmetric risk to reward to ensure that you're taking full advantage of positions that run in your favor and ensuring that even if you are wrong more than 50% of the time, you are still profitable at the end of the month, at the end of the year. Another key lesson that we learned from Paul Tudor Jones, and this is probably one of my biggest takeaways, is the way he dealt with losses. They stressed in the documentary, him and his trading partner, that they had lost the battle but had not lost the war. And that's just an indication that they know how to expand their perspective and get a bigger glimpse of the bigger picture, and they recognize that, okay, on this individual trade, we may have lost, but over the month, we're still up over the larger sample space. And over the next few months, if we continue to do what we did and we execute on our processes, we will be profitable because we know we have proven processes. So the best traders in the world don't avoid losing. This is a misconception. People think that when I become very good, I'm not going to lose. No. The best traders, they don't avoid losing. They're just very good at managing losing. and they have proper processes and plans and things in place to be able to manage losses so that they're there to take advantage of the big wins. So my question to you is, are you too zoomed in? Are you too focused on the individual trade? So whenever you do take a loss, you're extremely disappointed and extremely devastated, and you're not putting that one individual loss into perspective. And my next question to you is, what tools do you have to manage losing? There's a free tool that I've created for each and every single one of you called the Bulletproof Your Mindset tool. Now, this is a tool that's going to help you become aware of your expectations prior to taking a trade that ultimately drive a lot of the pain of losing trades. So by implementing this tool before every single trade you take, you're going to help remove 90 to 95% of the negative sting and negative emotion you experience in losing trades. This tool is also going to help you adhere to your trading plan so that you're accepting the risk and you're accepting that these losses are just a part of your edge, the part of business, that you paying for business expenses at the end of the day. So if you're finding yourself having a hard time stomaching losses and experiencing that negative sting like I know so many traders do, check that first link in the description and make sure you go in there and you put your name and email and download that tool. Watch the 2 videos that come with that and use that tool for the next 2 months and see what type of impact that tool has on your trading. And that tool pretty much helps you go through and mimic the mindset of one of the greatest traders out there, Tudor Jones. And we're going to talk about that now. Another key lesson that I learned from Tudor Jones was around his winning mindset. And one quote that he said in that documentary that I love is, never wishing, always trading. Never wishing, always trading. How many traders are there out there that are caught up in this virtual market in their head, in their fantasy land, about what they think is going to happen next, projecting their ideas onto the market, thinking that Eurodollar is going to go this way and this quickly, and this is how much money I'm going to make. They're wishing. They're never listening to the market and trading the market. And what they end up doing is they create this idea in the virtual market, and they go off and trade this idea in the virtual market they create in their head, and they're not even present with the real market where they're putting risk on. So I love what Tudor Jones here says about never wishing, always trading. And that's something I promote heavily in my trading mindset programs and this YouTube channel, especially in that Bulletproof Your Mindset tool. That tool, in fact, helps you not wish, but trade. So the best traders are present with the market. They're not caught up in outcome-based thinking in the virtual market in their head. They drop their outcome-based expectations. So they're present with the market. They're not wishing about an outcome. They're trading, they're present with the real market. Another key lesson we learned from Tudor Jones was on not cutting wins early. And in the documentary, he said, I want to sell, which was the emotional part of himself speaking, but I know the thing for me to do is to sit back, which is the process-based, higher, more advanced part of his brain was speaking. So what was really interesting to me in that little clip was that the dialogue between the emotional self and the process-based higher self. And in that situation, obviously he stuck to his processes and he stuck to what he knew was more profitable over a larger sample space in the bigger picture. So the best traders know how to separate the emotion from the process. The best traders are aware that, all right, I'm emotional in this moment. However, I am going to go back to reason. I'm going to go back to what I know based on my edge and based on my processes is most profitable in the long run. Now, my question to you is, do you have such certainty in your trading plan and your processes that you can actually do that? You could see in the Tudor Jones' situation, I think he closed down $5 million for the day or whatever it was. So at the time of it getting close to the take profit, he was maybe sitting up 4 million or something like that. So the question here is, do you have the certainty to let that 4 million go, knowing that you still made the right decision because you have such certainty in your trading plan and your processes? You have such certainty in your edge. Because as a trader, what's most important is the adherence to your edge. So if you haven't already done the testing and the development of your trading plan necessary to ensure that you have certainty that sticking to your rules is what's going to yield you the most profitability over the long run, it's an important thing to do. And we saw that with Tudor Jones. He knew he wanted to sell, but he also knew that his processes stated that he needs to hold on. Another thing that I loved seeing going through and doing research from Tudor Jones was that he had his plans and his processes written out and written down. And one little quote he had in his trading plan was, "I will take control of all trading situations." And obviously what he meant wasn't that he has control over the market, but rather that he has control over himself and what perceptions he has of the market, what decisions he makes in the market, and what actions he takes in the market. Because ultimately, that's all we have control over. So what I really loved about his plan and his processes was that he was focused on what he had full control over. He had nothing in there written about, I'm going to make this amount, or this is the outcome, or I'm going to buy this car, I'm going to buy this house. He didn't let outcome and process mix together. He didn't let emotion and process mix together. He was very good at drawing that line and distinguishing between the two. And he was very good at having clear processes and clear plans that he stuck to. So PTJ was process-based. He had a proven plan and processes that he was certain in. Many of them were psychological to prime his psychology for trading. So my question to you is, do you have a specific trading plan? Have you clearly laid it out? Do you have an overview of what your entry is, what your exit is, what your risk management is? And also, do you have specific trading mindset principles in there? One of the most key trading mindset principles that I teach all my clients, all my students, that we've seen Paul Tudor Jones implement is that Bulletproof Your Mindset tool. It's about differentiating between your ideas, your wishes, and what's actually in the market. If you implement that tool before every trade and you have that in your trading plan, that's going to make a significant impact to your emotional state and also your profitability. So if you haven't already, make sure you go and download that tool and you start implementing it. Another key lesson that we learned from Paul Tudor Jones was leverage. He utilized leverage. Tudor Investment Corporation currently has $12 billion of assets under management. That's $12 billion worth of leverage. Now, PTG had money when he was 26. He had great success up to that point. But at that point, he knew that he could scale what he did more significantly, and he knew he could do and have a bigger impact with his projects and his foundation and the type of money he made personally as well, if he looked for external leverage. And this is a great lesson because it's tied in very nicely with a lot of the prop firms we have nowadays. So too, all traders have access to an enormous amount of leverage that's very safe, it's very accessible through prop firms. So if you haven't already considered looking and doing some research into prop firms and tying those into, as well as trading your own personal accounts, have prop firms there as additional leverage. And what I suggest, I cover this in another one of my YouTube videos, I cover this in detail in some of my trading mindset programs. It's important to diversify your prop firms. It's important to have personal funds and multiple different accounts from multiple different prop firms, and then use the payouts you get from the prop firms to build personal accounts, to build other investments, to diversify. And then what you can do after 6 to 12 months of managing these prop firms is you can take that track record and you can go off and get private investment. You can start to scale up quite significantly. So the prop firms are a great, safe, low risk way for the most part. The only real risk you have is the fee you pay for the prop firm to scale up and to utilize leverage. Now, one of probably the most overlooked components of Paul Tudor Jones that I have personally seen from all the documentaries, from all the research that I've done on him, is the psychology behind the charity and the lifestyle. And there's a really key insight here that I haven't heard anybody talk about that I would love to share with you. So Paul Tudor Jones started the Robin Hood Foundation in 1988. Paul Tudor Jones is driven by a deeper reason why. He's got his foundation there. Now, what I've noticed from the hundreds of traders that I've worked with one-on-one and through my programs is that the more successful ones aren't only thinking about themselves. They're also thinking about beyond themselves. They're thinking about their family, they're thinking about their community, they're thinking about their state, their country. They're thinking about making an impact not only in their own life, but in the lives of other people as well. And what I've found is that the more successful ones, when they start to take care of their basic needs, they've got food, they've got shelter, they live a pretty good life that they're fulfilled by, then what they start to do is they start to think about providing for their family, they start thinking about going beyond that as well. And what then happens is your reason why for trading goes beyond just paying bills. It goes beyond just living from week to week, month to month. And it goes to something that's a lot deeper, a lot more meaningful. And what happens in this situation is that when you expand your reason why, and now all of a sudden you have to provide for more people, you have bigger projects you need to fund, then guess what you do? That's greater accountability to grow your trading and to scale your trading. and you now start making more money from your trading. You start to take on more investment, and you start to scale up. So this was evident from Paul Tudor Jones. There was a great little interview between him and Tony Robbins in one of Tony Robbins' books that I didn't put into this, but he even mentioned in that book that there's a project that he would love to do, but it's beyond his resources now. And one little phrase he said in there, I'm paraphrasing, but he said, it's time to get back to work so I can go off and achieve that. So even at this age, the age he is now, and with all the success he's had, he's got a new vision, a new reason why to still show up at work and get work done and be successful and continue to scale, because he has a new pursuit that he wants to go off and accomplish. And what I've also seen is that traders who only have a reason why for themselves, right? They just want to pay bills. Guess what? When they accomplish that, now they lose a lot of their motivation and discipline because they've already accomplished their end goal in their mind. There's nothing beyond that. So I encourage each and every single one of you to expand your reason why. Think beyond just yourself. Think about your family. Think about your community. Think about a foundation or a philanthropic pursuit that is meaningful to you. Don't just make something up. It's meaningful to you, and that can hold you accountable to become and be a better trader. Now, the other component here is that Paul Tudor Jones also lives like a king.
This morning, Paul got out of bed at the Palace, one of the most elegant hotels in the world.
The lifestyle here in Gstaad is incredible because the people that I've met here and the people that I deal with, most of them are my clients. They pay me to allow them to enjoy this lifestyle.
He is, reported in some of these documentaries to be snowboarding and skiing in some of the best resorts in Switzerland. He's got multiple homes, boats. He's got a beautiful family, and they live like royalty. They live in luxury. And this is something I've also observed in a lot of my successful traders, is that they believe that they're worthy of that life. And they're very hardworking. They provide for other people. They're very altruistic in that sense, but they also have a narcissistic component where they want to live an incredibly great life, an inspired life themselves. They want the best for themselves. They also want the best for others. And I think Paul Tudor Jones is a great example of someone who's balanced the narcissistic and altruistic components. He has his foundation. He's got his charity. He provides back to the community, especially in New York. And he also lives like a king. He's balanced those two components. And I think this is such a key lesson for any trader watching, that it's wise to want the best for yourself, to live a great life and, travel and maybe, business class, first class, have nice things, nice cars, nice watches, but also have that component that loves to give back to people and loves to do things for other people and to provide for other people. And this is why I really suggest having that deep reason why behind your trading. And guess what? This lifestyle is also another level of accountability to continue to be a very successful trader, because you've got to fund it somehow. Okay, so it was obvious to me that Paul Tudor Jones has balanced altruism and narcissism. So don't overlook this principle. Don't overlook the lifestyle and the charity of Paul Tudor Jones. I personally believe that both those components were a huge factor in his success. So a question for you is, what's your reason why? And can you expand that reason why? Can you think, instead of just thinking month to month or year to year, can you think 3 years, 5 years into the future? And instead of just thinking about providing for yourself, can you think about providing for your family, for your community, and think beyond that? So what's your reason why, and how can you expand that? And the next question I have for you is, do you treat yourself like a king or a queen? Do you live like royalty, or do you plan to? Or do you feel like there's some limiting beliefs around what you deserve and what you're worthy of? Because these are components that need to be addressed if you want to go off and achieve great success as a trader. So I hope you found this in-depth analysis of the mindset of Paul Tudor Jones useful, and I hope you got some actionable insights that you can take away from this video and implement to see better results in your trading. Now, if you enjoyed this video, please like, comment, and subscribe, and please share this video with your trading friends and your trading communities. I look forward to seeing you all in the next video.